Hi, I'm Joseph Flannery, and I'll be pitching Tata Motors, an automotive manufacturing company with a market cap of 1.4 billion Indian rupees. I believe that Tata Motors will outperform a warranted price of 479.5 Indian rupees, giving an upside of 34%. Tata Motors generates revenue through three business divisions: Jaguar Land Rover, Tata and other brands of vehicles, and other operations. Tata Motors operates globally, with China being the largest geographical market, followed by India. Revenue has increased over the past 5 years with a relatively stable net income. The Tata Motors CFRI level has been consistently above the cost of capital, with the exception of the period of 1997 to 2002, when the sales growth, margins and asset turns took a heavy hit due to the fall in demand. The company recovered and brought its CFRI level back above the cost of capital. This once again created shareholder value. The growth peaked in 2008 due to the acquisition of Jaguar Land Rover. The sudden growth, coupled with the economic slowdown, had a detrimental effect on the CFROI level. The company recovered from this, and the margins and asset turns once again began to increase, creating CFROI levels that were stronger than ever. Comparing Tata Motors to one of its close competitors, one can see that Tata Motors has a stronger CFROI level, and the market favours Tata Motors. Here we can see that Tata Motors is an attractive investment compared to its two main competitors. We can also see that Tata Motors has a stronger CFROI level and margins, but is only average when considering the asset turns. Net profit fell by 56% in the fourth quarter of the last financial year, despite revenue increasing 3.5% in the 3 months to the end of March. Tata Motors' full-year income was flat at about 140 billion Indian rupees. The net loss of Tata Motors' domestic business was 47.4 billion Indian rupees versus 3.3 billion Indian rupees profit in the previous year. The Indian automotive market posted a decline of 9.3% in financial year 13-14, fueled by the high inflation and interest rates. Tata Motors' domestic car and trucks unit also reported a net loss. This was due to the out-of-date cars and prolonged slowdown in the domestic commercial vehicle market. Using this poor performance and bleak market, I've estimated my own warranted price for Tata Motors using the Holt methodology. Using information from the balance sheet, I have input financial year 14 sales growth at 21.1%. This is a 9.4% drop in sales growth. The subsequent fall in sales growth is the medium of JLR's sales growth. I have predicted that margins will decrease and remain at 10% due to the economic slowdown. I predicted the asset turns will plateau due to the Horizon Next customer-focused strategy. This forecast data gives a prediction that CFRI will fall to 5.9% over the next 5 years. It shows that the real asset growth also falls over the next 5 years to 0.8%. The weakening Chinese and domestic markets will have a profound effect on Tata Motors, and although I do believe that they will recover, it will take them time to consolidate and win back the market. My prediction is therefore a warranted price of 579 Indian rupees, giving an upside of 34%. This is a more pessimistic view than that of Holt, but it still shows that the market is undervaluing the company. Thank you for listening.